You're listening to Seattle Real Estate Podcast.
Hey everybody, I'm Sean Reynolds, the owner of Sawant Properties Northwest, Reynolds and Client Appraisal, and your host of this episode of the Seattle Real Estate Podcast. So we are going to take a look at a new tax that the Seattle City Council has proposed on the biggest of companies in Seattle. Now, they've tried to do this before, and it's typically been shot down. So let's take a look and see what we have and why we are taxing the biggest companies in Seattle and not anybody else. So let's jump on in. Seattle, and this is from an article from GeekWire. That's a publication that I like to look at because I think sometimes they've got some pretty interesting perspectives on what's going on business-wise. So Seattle City Council unveils new payroll tax targeting Amazon and other large companies. Why are we going after the big companies? Well, they've got the most money. So tax Amazon. And I did a video a few days ago on the Chaz situation in the Capitol Hill neighborhood of Seattle. That's the Capitol Hill Autonomous Zone, or otherwise known as CHOP. That's the Capitol Hill, what is it?
Organized protest.
That's the Capitol Hill Organized Protest. I can't keep all, things are changing so rapidly, I can't keep track. I have to have other guys keep track for me. And one of the things that I saw there was a tax Amazon table. And so people are really on board with taxing the big businesses because that's the biggest target there is for money. So don't run your own budgets, just tax big business. Solid game plan, right? All right, so the Seattle City Council introduced a new proposal Tuesday to tax the largest companies in the city, the latest in a series of attempts to capture some of the wealth generated by Amazon, Expedia, and other big businesses to address critical challenges. So do we have a budget issue? Yeah, we do. How come? Well, COVID came along and we pretty much shut down the economy, and we're still shut down for a large part. You think business is back to normal? No, it's not. We're not even in phase 2 yet here in the state of Washington. And so the governor basically said yesterday, we're going to have some real issues with our budget. Yeah, no kidding. You've shut down the government so long that you're going to have a massive budget shortfall. So we're going to take a look at, Amazon and Expedia and maybe a couple of other big companies and say, you guys are doing so well. Your business model is so good. We want some of that money. We need some of that money because we can't budget internally well enough. We know that by shutting the economy down for this long that we're not going to have enough money to run everything. But you guys are such good business owners and managers. We want some of your money. That's essentially what's going on here. So let's keep going. The proposal introduced by Council Member Teresa Mosqueda is similar in structure but more modest than competing legislation from Council Members Kshama, Sawant, and Tammy Morales. It would levy a tax on salaries exceeding $150,000 annually at Seattle's largest companies. Businesses with total annual payroll expenses of $7 million or more would be subject to the tax. All right, so let's think about this. So you are really a successful company. We should tax you more. We should tax you when we're not taxing anybody else. Does that make any sense at all? It's just kind of a target on big business. Is that fair? No. What's going to happen? Those big businesses will move. And are they doing that? Yeah. Where's Amazon's headquarters 2 basically going in? It's going in like 2 miles from where I'm pointing right now in Bellevue. And that's where our offices for Sawant Properties Northwest and Reynolds and Client Appraisal are located. So Seattle puts all this pressure on big business, and they're basically fleeing to the suburbs where most of their employees making $150,000 and more already are, because nobody wants to deal with the nonsense going on in Seattle. So, I mean, that's just kind of bottom line there. All right. So the legislation establishes a tiered tax plan that breaks down like this. Here's how it goes. Companies with annual payroll of $7 million to $1 billion, payroll $1 billion, $7 million to $1 billion, would pay a 0.7% tax on salaries between $150,000 and $500,000, and a 1.4% tax on salaries greater than $500,000. So we are really legit only taxing the upper end, getting paid workers at these upper end generating companies. That's all that's going on here. Companies with annual payroll exceeding $1 billion would pay a 1.4% tax on salaries between $150,000 and $500,000, and a 2.1% tax on salaries greater than $500,000. Now, a lot of people are going to say, well, those people make a lot of money. They should get taxed more. They already are. Have you looked at the tax brackets that those people are in? Yeah, they're way, way higher. Should companies be paying, should successful companies be taxed based on their success? I don't know. You be the judge. Maybe let me know in the comments here what you think. Is this a fair thing to do? Should we be taxing companies based on their success? They've got more money. Should we do the Robin Hood and steal from the rich and give to the poor? That's essentially what Seattle's proposing. Okay, so the city estimates the legislation only applies to the payroll of employees based in Seattle, because this is a Seattle city tax. It includes stock grants, but does not apply to stock options, which may or may not be exercised in the future. So you are penalizing companies for growth by putting this tax in place. All right. The city estimates the taxes collected from companies below the $1 billion annual payroll threshold will generate about $173.5 million each year. The city council does not know how much additional revenue would come from taxes on companies with annual payrolls exceeding $1 billion annually, because that data is confidential. Yeah. Okay. So bigger, and here's kind of a graphic. I'm looking at a graphic for everybody that's on the podcast. Bigger corporations with higher salaries contribute more. And it just kind of shows what it looks like. And so basically it starts off at 0.7%, doubles to 1.4% if you're a company with more payroll greater than $1 billion. And then it jumps from 1.4% to 2.1%. as basically your business structure is more successful and generates more income. The legislation assumes that 3% of Seattle businesses will be subject to the tax. And guess what? Those businesses are already shifting jobs elsewhere. They are not staying in Seattle. Bellevue is one of the biggest beneficiaries. I did a video, I think last year, on the 4 massive office towers that a couple of them are being constructed right now, and the others are being taken over, and that's where Amazon is kind of silently building HQ too. It's not even really all that silent. It's just kind of obvious. All right, we know our people are living in this city already. It's just across the lake from downtown Seattle, and Seattle is basically pushing out business by doing this kind of stuff. And the other stuff that they're doing, that with the whole Chaz Chop thing, I mean, that is a real deterrent. Businesses don't want to be around that kind of thing. That's not a business structure type game plan that you've got going over there. And so a lot of businesses are, especially big ones, are fleeing downtown Seattle as a result. Expedia is supportive of the legislation. Let's kind of look into that in just a sec. GeekWire reached out to Amazon to comment on the proposal, and we'll update this story if we hear back. Yeah, you're not going to hear back from Amazon, I don't think. Expedia, here's Expedia's explanation. While we are concerned about any new city tax, yeah, you should be, because it hits your bottom line, and you're going to generate less money. While we're concerned about any new city tax in this period of economic uncertainty, yeah, we're in the coronavirus era, right? This is a necessary conversation until progress can be made on state and regional solutions. Well, the state solution is you get the economy going, crank back up. Don't do this slow start thing. We're one of the slowest states in the United States, and our cases are increasing, but guess what? You got 60,000 people at protests just running around doing their own thing. I don't know. Seems pretty hypocritical to me to say, yeah, protesters, they can do their thing, but because we've got a budget shortfall, we're going to tax big business. I don't know. That doesn't strike well with me. And that quote is from Richard Lazario. He's the government affairs manager at Expedia Group during a press conference Tuesday. So he's basically saying he's probably on the corporate end of things. He's going to have to say, yeah, I can't really say I don't really like this tax, because then headlines will read Expedia against Seattle City Council proposed tax. That's not going to look good, because then that's big business just kind of stomping on city government because they've got more power than anybody. So he's got to kind of put out a statement, and that's his statement. And he's basically saying this is a necessary conversation until progress can be made on state and regional solutions. So we're going to hit on that in just a second. And so in 2020, you've got $86 million invested, and that is they're spending this. The Seattle Council is spending the city reserves. Well, we knew that was coming. I've done a podcast on that city governments are just going to basically not have any money after the coronavirus. All their budgets are going to have a shortfall because of lack of taxes. You shut the economy down, guess what? You're going to have a massive, massive budget shortfall. And that's what we're looking at doing. That's what the city of Seattle is looking at doing. And here's their solution: tax the rich. All right, and in 2021, the tax billing starts. And they're going to say 86 million invested in 2021. And then 203 million will be invested from the tax collection from this program being started. All right, and the city council would initially borrow money from emergency funds to provide COVID-19 relief and pay the money back with revenue from the payroll tax down the road. So Seattle City Council can borrow money that Federal Reserve and the federal government has basically put in place because they know cities and governments across the country are going to have these shortfalls. So there's liquidity already in place for the city, and they're saying, well, we don't want to take on any more debt, so let's go ahead and tax Amazon and Expedia, maybe a little Facebook. Let's throw a little Facebook in there. All right. The funds would go towards small business grants. Don't we already have that from the Paycheck Protection Program, small business grants? Isn't that kind of what was used to prop up small business? I think so. And actually, there's a program in place called the Small Business Administration Loan that's there for small business grants. Second thing is housing stability programs. Okay, don't we have the rent moratorium going on in place right now? And don't property owners, owner-occupied, have the mortgage forbearance program, both set in place by the CARES Act? We've got that going on, right? All right, so we're 0 for 2 in what the city is saying they're going to spend the money on. And third would be emergency grocery vouchers, among other programs. I was over at Chaz, and I saw a ton of groceries being handed out just willy-nilly. So do we have an emergency grocery voucher program that we need to be taxed by big business? I don't know. That's something that should probably be looked into, right? And this is among other programs. All right, what other programs? You're proposing literally hundreds of millions of dollars in taxes, and we're going to have some other programs. Let's look at those. Oh, we really can't yet so far. All right, when the coronavirus passes, revenue from the payroll tax would fund affordable housing, which we do need, but as the government, you need to make housing more available for builders to develop. And I've done a ton of podcasts on that. And that's part of the problem, is that the development process in Seattle and in Washington is so horrific that that's a large part of why we have a massive supply issue. And the homeless services. All right, but the Seattle City Council has basically let the homeless problem develop. We've got one of the worst homeless issues in the United States, and it's because of our city council, and everybody knows it. So should we be taxing big business to take care of a homeless problem that the Seattle City Council already put in place? I don't know. That just sounds kind of sketchy to me. And economic and workforce development objectives. All right, we'll give them that one. So we've got one or two issues in there that seem legit. The rest just seem like a cash grab from big business by the Seattle City Council. All right, so this is a tweet from council member Teresa Mosqueda. She is the Jumpstart Seattle. That's the proposal. That's this tax proposal we're announcing today. Number one, helps respond to urgent needs due to the COVID crisis this year. That's the first thing. And number two, maintains essential services at the city so that our working families can have services like childcare, parks, safe streets, and libraries. Our parks are being overrun. We don't really have safe streets because you don't want the police there. And libraries, you're going to, I don't know, this just doesn't make any sense. That just doesn't make any sense to me. But whatever. Mosqueda said during a press briefing Tuesday that the legislation was developed with input from business and labor leaders. I would love to hear their side of this. So you're going to sit some big businesses down and say, hey, we need you to chip in here. I want to hear that conversation, as well as social service advocates. Yeah, I can imagine they're in there. The Seattle City Council has been trying for years to pass a tax on Amazon and other large businesses in the city to alleviate the challenges of rapid growth, including a homelessness emergency that has proved difficult to solve. The effort stalled in 2018 after a protracted battle over the so-called head tax, which would have applied to large companies on a per-employee basis. And it was after that that Amazon started looking around going, where else can we go? Oh, yeah, there's Bellevue right over there, a couple of miles away. So Seattle City Council, if you want to do this, that's fine, but realize that you're going to lose more of your tax base because more of these jobs are going to come over to Bellevue just outside of where your city boundaries are, and that's just kind of how business works. Seattle City Council unanimously passed the tax, but quickly repealed it, and we're talking the per employee basis head tax. The City Council unanimously passed the tax, but quickly repealed it after facing opposition from the business community. Imagine that. Shocking. Amazon was the most vocal opponent of the tax because you're hitting them up because you can't manage your own budgets. Amazon was the most vocal opponent of the tax, threatening to slow its growth in Seattle if the legislation went forward. Well, they've already done that. People are not moving to Seattle proper. They are moving to the suburbs because of stuff like this. In the wake of the head tax, Sawant doubled down on her Amazon tax plan. Her proposal would raise an estimated $500 million per year. That legislation was on pause until recently due to the procedural rules tied to the pandemic, but they were revised in early June. So we're trying to slide in some legislation here because we're kind of in between the coronavirus, maybe a little Chaz, a little Chop. Let's just try and slide this in and see if anybody notices. I don't think that's going to go well. I think there will be some pretty big opposition, or the thing just kind of dies on its own. But we'll see. But these are some of the reasons that Seattle is becoming wildly unpopular to have a business in because of stuff like this, especially big business. And Amazon has put us on the map. Microsoft has put us on the map. But Microsoft, they're based in Redmond. They're based just a few miles that direction from where I'm sitting right now. And they are not, you hear about Microsoft in Seattle, and Microsoft does have a big presence in Seattle, in especially South Lake Union area. But their headquarters are here in Redmond, just outside of where they would get taxed so heavily, like this stuff that is being proposed here. So if you've never run a business before, maybe you think that this is a really good idea to tax the biggest businesses in town, but it is not. They already pay a significantly higher share of taxation. Look at any tax structure. They already pay a ton in taxes. And the people who make the most money, they pay way more than everybody else down the food line, because that's just how the tax rate works. It's not an equal tax. Income tax isn't an equal tax, and this tax structure isn't an equal tax either, because it's hitting up only 3% of the businesses out there. And those businesses, they have the ability to move wherever they want. They have the money, they have the budget to kind of go elsewhere. And that is what happens. And City of Seattle, until you kind of figure out your own budget and figure out how to operate independently, you're going to have more and more businesses leave, especially the big ones, as they look for other cities and other areas around the City of Seattle that are going to welcome them with open arms and not tax them like you are proposing. So that is about all I have on this one. That is kind of my opinion on this new Seattle City Council tax. I know a lot of people in the area have heard about the Seattle City Council and kind of what they do. I'm not in favor. I'm not in favor of a lot of what's going on over in Seattle, because I think it's giving Seattle a really poor name. But it is what it is. And so I just kind of try and bring you the information of what we have going on. And so that is where we are at right now. So thank you so much for staying with me to this point in the podcast. Again, I'm Sean Reynolds from Summit Properties Northwest, Reynolds & Klein Appraisal. We will catch you on the next one. Bye for now. forget to subscribe to our channel and hit the notification bell so you'll know when our next video is out.